Yeah. Okay. So that was one of my questions. The other one is private lending timeline.
Mhm.
I don't actually mean in the concept of lending. I mean in the concept of getting private lenders. So as I've started having discussions with potential private lenders, um, I'm wondering if I'm not being aggressive enough on moving forward, or if I'm taking the appropriate pace or whatnot. Um, so like I have like next steps, and we have another meeting and things of that nature, with two different lenders that I'm talking with, or potential lenders. But I'm wondering, what does your cadence normally look like from going from starting a discussion to them agreeing to be a private lender? Is that varied by person for the most part, or is it roughly 2 or 3 meetings to work through things, get them to understand your vision for your business, etc.? Can you walk through any of that for us?
Yeah, that would be so they're going to break down into really three camps. One is, no, it doesn't work for me, whether it's that they don't have money or they're just not interested in it, or they invest in something, Beanie Babies, whatever it might be. They're just they're a no, right?
Yep.
The other two is on the other end of the spectrum, somebody that's pretty friendly to the idea and wants to get moving pretty quickly. The majority of them, though, are going to be a longer term, I guess, close, if you will. So you'll have some people that are shorter term, maybe one out of every 10 people that's interested in lending is a shorter term close from a private lender standpoint. The rest of them are going to be a longer term close. And this can be anything from 6 months to a couple years. I've still got people, and maybe that's a little bit conservative. Probably maybe 3 months to 18 months to close them as a private lender. Because what's likely going to happen is you're going to have an initial conversation. They say, "Oh, that sounds interesting. Maybe that might work for us." And then either the conversation fizzles out, you can't get a hold of them, or it just becomes not a priority for them right now. Some life event happens, they have some medical issue for their kids or whatever, and you just kind of leave it out there as an option, and you follow up, I don't know, 6 months, 12 months later or something like that. But most of the time for those people, they've reached back out to me and said, "Hey, are you still doing this real estate thing? Is this still?" That's why I think it's helpful to brand yourself as like a real estate person. So if you're on social media and you post your most recent deal, great. My goal is when someone thinks Blake Choisnet, I want them to think real estate, right? So that they know what value I can offer them, and they say, maybe he still does the lending thing that we talked about previously, or whatever. So when you have successes like the before and after pictures, the HGTV, version of your burr, post it, say, "Oh, this was really fun." It develops a little bit of credibility. And then also people are like, maybe I should reach out to them. So as far as timeline, that's what I would say. And I think a lot of that is because the method that we're using is we're accessing other people's spheres of influence, right? So you're asking somebody, do you know anybody that would be interested in boom, 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 right? That really short pitch with those value statements that are important to the type of person that we're looking for. When you ask them that, they should go to thinking through their network, and then they'll self-identify, right? Because you're really like, one of the reasons you're asking that question is to access their network, but you're also saying like, "Hey, are you interested?" Right? But giving them a soft out. So if you have those conversations, some of them are going to be ready to go. But most of them, the private lending approach or the idea of private lending is not as familiar to them. So they need to warm up to the idea. And so there may be a piece of this being your first kind of finding your own private lender that, maybe you could push a little bit harder, but it taking a little bit longer is a pretty natural experience just from the type of people.
Yeah, thanks.
Yeah, no, that's a pretty characteristic experience. And it brings up something that's really important, really, for everybody to hear, is just because we've got private money accessible within this group doesn't mean you should wait until you need private money to go find private money. Right? You really need to start recruiting and working on growing private money. Now, if you're one of the people that we've talked about, your strategy is starting out turnkey because you've got some money saved up, then you don't need to start rallying the troops around private money yet. But once you start working on the Burr method and growing in the Burr method, you need to start at least having those conversations and continuing to grow those relationships, because the reality is this person that you're talking to might not ever lend to you, but it might be his friend's friend that he bumps into at some, real estate meetup, and they say, golly, I've got $400,000. I don't want to put it in the market because it's just crazy. Elon just tweeted something and my stock went up or down or whatever it might be. And, I would rather something a little bit more consistent, maybe a little bit more liquidity, and he connects you. Right. So that's the reality of the situation too. The other thing is, when you're having these conversations, trying to discover what is really valuable to them. I go back to the example of one of the other students who was talking to his dad and practicing his pitch, right, just to get comfortable with it. And he said, what's your portfolio doing right now? What's your goal for your portfolio? My portfolio is doing 3% or whatever. And he said, well, what do you want it to do? 6%, and it kind of turned into a real conversation where he said,
yeah,
well, maybe we do 5%. So, and then he got $100,000 line of credit from his dad at 5%, which is like dirt cheap money. I mean, that's cheaper than conventional money right now. Understanding what their goals are. And I mean, on the opposite side, I've had a conversation with a guy who's a tech startup CEO in Austin, and he had some cash because he's just a freak smart dude, a software computer science guy from Georgia Tech, developed this algorithm that helps him like kind of predict trading. And so he bootstrapped his startup by, he'd invest $5,000 and turn it into 60 grand in like a week or something insane. And so I was talking to him about private lending, and he told me about the results he could get if he actually put time into it. And I said, well, then you shouldn't invest with me. You should go do that as much as possible. And if you don't align with what they need, then that's totally fine. But I think it is helpful, and this is probably where some of your sales background will be valuable, to poke at the indecision, right? If he's just scared, that's fine. You can hold his hand through it. If he doesn't trust you, there are things you can do, right? You can show him your deals. You can show him the deed, like go analyze, go through PropStream and show Douglas Schwanee is on this deed, and show him the cash flow that you're getting. But if you don't know what the real objection is, it's going to be hard. And there's also armchair investors that are going to say, I want to invest and make more money, but then they just don't do anything about it. They talk about it a lot, but they don't do anything about it. So, but yeah, the time frame that you're talking about is not unreasonable and not uncommon.